Should you buy the dip in Lockheed Martin stock? We're going to go over that and the most recent quarterly numbers on today's show. What is going on, investors? Hopefully you guys had a wonderful day out there. Tell you what, you probably had a lot better day if you did not own a big bulk of Lockheed Martin shares. Why? That is because they were down over 11%, nearly $45 per share, down to levels that we, quite frankly, haven't seen since the end of January and February on this one, close to $330 per share. Talk about what this means from a technical perspective. This one's actually setting up just absolutely perfect. We'll talk about that here in a second from a technical perspective. Now, Lockheed Martin, over the last 10 years, stock's up 377%. Over the last 5 years, up 50%. This doesn't include the dividend, too. You're getting 2.98% on today's yield, and you got a dividend rate of about $11.20. You got a forward PE of just 14 on this one. Might have to walk back a little bit because we'll talk about the guidance and the reassessing of a 5-year plan. That was just a dramatic and a disastrous headline that Lockheed Martin printed earlier in the day. I tell you what, you got a dividend portfolio that should first of all decide if you're going to buy the dip on Lockheed. I think the first thing to understand about Lockheed, if you're looking for a capital appreciation and explosive capital appreciation, this stock's simply not going to give it to you. Okay. And is it going to go up over the next 5 to 10 years? I think most of us would probably bet that it would, but will it go up as much as some high flying tech stocks, even mega cap tech stocks? I would argue probably not because of what management said inside their press release. We'll get to the guidance and more, but man, the headlines were ugly this morning on Lockheed Martin as it plunged on bearish revenue guidance, and they were going to reassess its 5-year plan. That is really ugly when a company does that. Now, looking forward to full year 2022, that's the upcoming fiscal year for Lockheed Martin, they're expecting revenues between about $66 billion. The consensus was for $70.5 billion, so well below that, about $4 billion. It's, maybe 5% lower than where people were thinking Lockheed would be. Now, this next segment is an actual quote from the CEO of Lockheed Martin, and I quote here, "Our conclusions, which are reflected in our updated 2021 guidance and subsequent trend information, reflecting continued strong cash flow generation, but a slight reduction in revenue in 2022, exactly $4 billion, essentially lower than what the street was expecting, and roughly flat to low single-digit revenue growth rates in both revenue and segment operating profit over the next few years, with increasing growth opportunities in the years to come." Basically, what he said here is we had to drop our 22 guidance. Okay, that comes down. Not that big of a deal. But he's saying that we're going to be roughly flat to low single-digit growth, both on revenue and profit over the next few years. I think you're expecting at least 3, maybe even potentially 4 years there. So you're looking at a stock that is going to basically be in a holding pattern for the next couple years when it comes to both revenue and profit. So you have to ask yourself, when we are, quote, buying the dip on a company, does it make sense? Okay. What's the catalyst to send Lockheed Martin shares higher when the CEO just said that we are going to be flat to low single-digit growth over the next couple years? Now, if you think the entire market is going to be in that same boat, that all of a sudden the economies are going to start coming to a screeching halt, well, a company like Lockheed Martin might not be the worst place to park your money. You're getting a little bit of a dividend and you're paying a low valuation. I tell you what, these shares come back even more or just a little bit more. You're getting incredible value in Lockheed Martin. Now, the other upside potential is the CEO is completely sandbagging, or he's completely wrong, or he gets things completely wrong. Maybe the market shifts. Maybe, heaven forbid, World War IV or III breaks out across the world. Well, obviously, that would be very bullish for Lockheed Martin shares. But absent of that event happening, and I think most of us are crossing our fingers that that would not happen, well, I would actually believe what the CEO is saying here. Now, buying the dip is, in my opinion, more art than it is science. The last buy the dip opportunity I think that I've posted here on the channel was FedEx. Now, a couple days ago, I posted Verizon as well. I think it's too soon to understand if that is a strong buy the dip opportunity, but FedEx certainly turned out that case. And the reason why I think FedEx was a very good buy the dip opportunity is that is a market segment, when we're talking about freight and logistics, is a growing opportunity, one where FedEx is having trouble meeting demand. In fact, all the shipping and logistic companies are having trouble actually meeting demand. We're not necessarily seeing that from the comments of Lockheed Martin. So that would not be necessarily something I would be super excited about buying the dip. Now, one thing that we might think about, though, is that investors are really overreacting tremendously to these guidance figures and what the CEO commentary was. Because take a look at this. Here we go. We got net sales. This is for 2021 fiscal outlooks. Look, the net sales coming in basically at the low end of the guidance that they issued back in August. The business segment operating income, again, a low end of the guidance, just slightly below it. This is, I actually appreciate companies that do this, because if they did not update this guidance and then all of a sudden they came out on the low end of it, man, this stock might have reacted even further down. And so it tends to be one of those things where management will get out in front of it, take the pain early, let the stock kind of wash itself out, and then maybe start working its way back. But look, things are not necessarily that bad. They're just coming in at the low end of their guidance kind of across the board. Now, let's take a look at the most recent quarterly numbers. I think those are slightly less important than what the guidance had to say, but still relatively important. We got our net sales here. We see that we have declined quarter over quarter on a yearly basis here. Okay, we went from 16.5 down to about 16. Gross profit, cost of those sales came in at 13.7. So our gross profit actually went up. So our sales went down, but we drove some efficiencies on that cost side. We went up on the gross profit side from 2.1 up to this 2.3. That gives us an operating profit coming right at that $2.3 billion mark. $2.3 billion mark. That's up from about 2.15 where we were in the previous period. All things being considered, the most recent quarter is essentially sideways. The company and management is basically predicting over the next couple years that this thing is going to be sideways from a financial perspective. Now, from a technical perspective, we are absolutely at an area of demand here. Buyers have stepped in. I'm on a weekly chart. I wanted to give you a big old broad view of Lockheed Martin. I'm on a weekly chart. I drew this line in here because it acted as support here, acted as some support back here. I mean, this is back 3 years ago, and it is acting as support again here. Now, technically, depending on how you want to look at this stock chart, we are in still a long-term uptrend, okay? You had a low here, a higher low. You got a higher low here, and I tell you what, we are on the knife's edge from a technical perspective over at Lockheed. You've got to hold this level at $330 per share. If you don't hold that level at $330 and you break these previous lows here, which are about $320 per share, I mean, we're talking like $10 from where the stock is right now, then now this longer term uptrend is actually broken, okay? Because you will have a low, higher low, and then all of a sudden now you'll have broken it and you are reversing trend. Now, from the shorter term perspective, you've got a high, a lower high, pretty much a lower high, and we've made another lower high as well. This thing is consolidating. So the way personally I would play this is, if you really want to be ultra safe, you do want to step in, or you did step in today and bought the dip at about $332 per share, but you don't want to get whacked on this one, okay? You don't want this one to go the other way. We need to put a stop loss down here about $320 per share, because if you break 320, I tell you what, you've got high probabilities of coming down to 300, and I think you've got a very high probability of coming down and retesting these lows down here at about $290 per share, because when you break these previous lows, and again, we are on a weekly chart, we are talking very, very much, these bars are actually weeks of time, so you've got a lot of volume kind of wrapped up into each of these candles, and when you break through previous areas of support, the lower areas tend to start being a magnet. It's almost like dropping through quicksand, and you're going to drop down here. There's a magnet down here at 290 if you break 320 on this one. Now, let's imagine this level holds at $330 per share. I really think the best case scenario for Lockheed Martin is we continue to wrap and go sideways on this one. You really need, for this thing to look like it's reverse trend technically, you got to break up over $375 per share. You've got to take out this high here and make a higher high. Now, can this company do it? Sure. Is it going to do it on the backdrop of the CEO saying we're going to be roughly flat to low single-digit growth rates in both revenue and segment operating profit when you've got Facebook, you've got Google, you've got Microsoft, you've got Apple, you've got Amazon, all growing in the mid-30s, maybe as high as 40, maybe even high as 50% on that top line. They're wildly profitable. Some of them do pay a dividend as well, not from a yield perspective as good as Lockheed Martin. That's why I would only focus on this one inside your dividend growth portfolio. If you have a portion of your portfolio, which I absolutely think you should have some money tied up into more quote unquote safe investments, if you want to call it that. I don't necessarily think, as we see here, this stock by some would be considered safe. It's down 11% today, but it is a dividend paying stock, and you can hold this for a long period of time, reinvest those dividends, and it will help prop up your portfolio from a performance perspective, especially from the dividend side. So from a technical perspective, not loving this as much as I did FedEx a few weeks ago. That dropped into an area of demand. It just made it absolutely obvious. Now, I tell you what would change my mind on Lockheed is if things turned even worse on this one, okay? We tested this 290 level and maybe all the way back down here at $265 per share, because guess what? Now your dividend yield would absolutely soar on this one. And the earnings and the price to earnings ratio and the valuation you'd get this would be even better. I think your risk reward would be much, much better if this thing tanked even further. And so, in my opinion, I would actually cross my fingers and hopes this one tanks a little bit further. I would only play this one from a rebound perspective, bouncing here at 230, stop loss at 320, and see if we can play this bounce back up maybe into the middle of this range, 350, 360 on that one. That would actually make sense from a certain perspective, from technical perspective as well. That was Lockheed Martin. Should we buy the dip on Lockheed? I'm not as confident to say that as I was stone cold equivocal on FedEx and maybe a couple of these other stocks as well in here, maybe even Verizon to a certain degree. I think I'd rather have Verizon at a better technical level and a higher yield, and I'd rather had FedEx a month ago, again, with a little bit of yield, but higher growth prospects as well, with this commentary from the CEO basically saying this company is going to be flat, bearing some kind of crazy war outbreak, which I don't think anybody would necessarily root for. I'm not really super excited about this one. That was Lockheed Martin. Hopefully, guys had a great day. Back with more videos. Good luck with your investments.